we're trying to use like Citadel DAO wherever we can, at least until we're ready to accept any you know any attacks from the original Citadel.
You are the original Citadel.
Yeah,
That's my take.
At least in our
yeah,
hearts.
yeah. I hope so. Appreciate that, guys.
Hear ye, hear ye. It is our honor to welcome you to the KingMaker Podcast.
Well, we want to welcome Jonto to the KingMaker Podcast. This is Keith and Alejandro. How are you doing tonight?
Good. I had a pretty good day. What about you?
Life is good, but it's always even better when we get to chat with somebody interesting. So let's throw it your way, sir. Jonto, introduce yourself, my friend.
Hey guys, thanks for having me. Jonto here. So one of the core members over at Citadel DAO, which is the reason we're having this having me on. But most people probably know me from Badger DAO, which I've been at for really since launch, but more as a official core contributor for a little over a year now. So been there since that started, but been full time in crypto probably for the past 4 years or so. Mainly focused in DeFi, doing a couple different things, but not really finding that good full time niche till Badger. Before that, was working in fintech, focused on working with hedge funds and other asset managers on the software side for most of my career. And so at Badger and Citadel focused on governance, community, tokenomics, finance, things like that. So basically, not a developer, and do most other things.
Jonto, could you take us to maybe the origin of Citadel and why you now have a sub-DAO to Badger?
Sure. Yeah, I guess I could start with Badger's journey as well. So Badger launched with coming out of DeFi summer, so late 2020, right? Yeah, late 2020. It's hard to keep track. And the goal was bring Bitcoin to DeFi, and what it offered was really just some Yearn vault forks, but you just focused on Bitcoin. And a couple changes for how emissions were handled. And then also the launch was more kind of community focused. So there was a early contributor kind of campaign, so people were able to kind of contribute beforehand and get exposure to the token launch. And then when the token did launch, there was you could go deposit your Bitcoin, and there were staking contracts, which people were very familiar with coming out of DeFi summer. There were some different mechanics built in, like the longer you staked, the more weight you had, and things like that. And I think it really grabbed people's attention. Got people kind of into the protocol because it gave you incentive to stake longer. And then we launched Dig, which was a Bitcoin kind of a Bitcoin focused fork of Ampleforth, so it was a rebasing asset. And I mentioned I started at Badger just kind of in the Discord hanging out, and then working with some of the people that were on the team before launch on some of the token things, how to structure the vaults, and some tokenomics ideas and things like that. And then once it launched, a number of us, I don't know if the founders, how successful they were planning for it to be, but it caught on pretty well. And then it's pretty obvious more people were needed to contribute. So a few of us started kind of contributing pretty regularly, and then kind of moved into full time. And I would say it took a good 6 or 8 months really after that point for Badger to kind of find its footing. We tried a few different things. We had some different partnerships in place. We did a lot of things with UMA. We were talking to like Starkware for a while about some, Bitcoin focused layer 2 decentralized exchange. We were focused on the Dig thing for a while. We did some interesting collaborations with Meme around, and we did some other interesting things with Dig with like rebase mining using UMA and these other various kind of initiatives. And then I think it was, we had these Bitcoin focused vaults. And I guess to wrap it into convex already is, I always tell people that, everything was kind of smooth sailing a bit where, there's most of the Bitcoin vaults were focused on the curve Bitcoin pools, and, they would earn 5, 15, 20%. And we were doing Badger emissions on top, and we built out Badger Boost, which is our kind of holding Badger to earn more Badger thing. And once convex kind of came along, it changed the game where people kind of had to own curve or convex to kind of vote for the various pools that they wanted, and all of the emissions and all of the yield for Bitcoin pools got sucked out of the ecosystem. And then we kind of shifted, having to focus more towards this influence play. So we don't have to get into all of that right now, but we kind of focus towards how can we have vaults that have more sustain yield for themselves. So we had a few other products along the way, and we've kind of built out this more of an influence focus. But a lot of DeFi, and we ran into Badger as well, as it's a coordination game, and a lot of people, the way you should use tokens is to get people to coordinate in a way that's beneficial to themselves and to the protocol. And ideally, you can structure things in a way where if people all kind of behave a certain manner, it can be mutually beneficial. So that's, I guess it's kind of 3-3 in a way for the ohmies out there. And that's kind of the idea, I think, is with most tokenomics is, okay, so if people are kind of acting this way, then things should continue to be better for them. So the idea for Citadel really started, last fall, as we were kind of working through this new influence landscape and trying to figure out how to get, we're trying to get people to move into various vaults, kind of consolidate into specific pools so that we can kind of isolate where we're doing Badger emissions and kind of work with a more focused group and more focused deposits for how we can help people find better yield on their Bitcoin. So how can we as Badger, not necessarily getting anything by their existing more Bitcoin deposits, help everybody get better yields in Bitcoin for their Bitcoin deposits, and for that, and to do that long term, Badger has to get something back out of it, right? There has to be a flywheel, for lack of a better term, since that gets thrown around a lot. So the idea for Citadel came around where especially we're trying to incentivize people to move assets from one vault to another, or move into LP or do something with Badger, and costs gas, and you have to explain why people should do it, and hope people do it, and a lot of people just aren't even paying attention, and yada yada yada. So hey, the idea was more, okay, well, for the people that are interested, how can we help everyone kind of coordinate and kind of go on this path of building out more yield on Bitcoin in DeFi by having people kind of collectively put their deposits together. And that kind of became, I forget who it was, I wish I would remember their Discord name right now, but someone, I think it was also around time we were talking about kind of the transition for Dig as well. It's like, what's Dig's next move? And someone brought up the term Citadel, and I think that really stuck, or it just seemed like a great name for it as well. And it was, as Olympus and some of these other kind of more treasury DAOs were more in vogue and had caught on. And that was part of the inspiration for Citadel as well, or at least seeing these things kind of become popular is, hey, how can we, do this, but with a big Bitcoin focus. So that was kind of the initial inspiration. And then it's, since then it's gone through a number of iterations, and we've got a bunch of different, mechanics and initiatives that we're pushing on. But that was kind of the idea was, all right, if we want to kind of be true to our goal of bringing Bitcoin to DeFi, we feel like doing it as a collective has the best chance. And during that time, and we'll see how much we want to get into it, but Badger has kind of moved towards we've started as forking urine vaults, and since then we've done a lot of work on how we're managing um, managing emissions and providing security, and then also with these influence vaults, how we're harvesting bribes and doing governance that we have coming out. So it's becoming more of a general purpose vaults framework and protocol, and there'll always be a Bitcoin flavor to it. But I think to drive that kind of initial purpose and goal, having a treasury focused on that is pretty key. And I think we're already seeing kind of from the success, in, in terms of interest that we're seeing from the partners, the knights associated with the Citadel, that I think we're already kind of starting to feel pretty optimistic about that goal. So that's kind of where we are. It's a DAO that's spinning out of Badger. There's going to be a lot of overlapping community, a lot of new people coming in that had nothing to do with Badger before. That'll be part of the community. There'll be some people from Badger working on Citadel, and new people coming in to work on Citadel as well. So it's we've thrown around sister DAO, sub DAO. It'll be a DAO that'll operate under its own directives and initiatives and goals, and have its own governance. There's obviously like some portion of the token is shared with Badger, but beyond that, it's we're trying to keep things pretty flat and separate, because I think we're all of the opinion that it has to stand on its own to be successful, and the best thing for Badger and the community and Citadel holders and Citadel team and everybody is for it to be as successful as possible. So haven't figured out the right term, but it's a DAO built by Badgers and other folks that obviously have a lot of ties back to Badger. But we hope it will really stand on its own and be a great new cool thing in DeFi, and we'll all see how it plays out.
With Bitcoin really being sort of the, for lack of a better term, the gateway drug into crypto, and the Bitcoin community being so maxi in their own little world, what's that been like bridging Bitcoin and DeFi, or connecting Bitcoin and DeFi and those communities? Talk a little bit about that. Just curious as to what the experience has been.
Yeah, I think it's one of those kind of silent majority things, right? Where I imagine most of the people in crypto respect Bitcoin for what it is, and also respect Ethereum for what it is, and also respect a fair number of other coins for one reason or another. And I think it's easier to have these be loud and have these stances that it's all ETH or all Bitcoin. But it's it has been interesting. I think one of the interesting things with Badger over the time that I've been there, it's we've done a good bit of education, and we have a very, very welcoming community. And I think a lot of that is because it's a lot of people's first entrance into DeFi. And we've had for a while the Badger Bridge, which is a Ren bridge, so Ren protocol, but branded for Badger, and it's you can come there and deposit. I want to deposit 1 Bitcoin into a Badger vault, and it'll pop up with a Bitcoin address. You send your Bitcoin to it, and then it processes through and deposits. So there's you can make it easy on people, but obviously DeFi is also kind of can be a scary place to operate. So we take security very seriously, and want to make sure people are. I think no one would ever, a Badger would ever say take all of your Bitcoin, please take all of your Bitcoin and put it in Badger and put it in Badger vaults. I'm sure that would be great for our fees and revenue and things like that. But if you're really holding on to it, you got to be careful and be aware of the risks and, size accordingly for where you're, putting those risks. So I think we just try to be very upfront with folks, and I expect a lot of people, for as many Bitcoin as they have deposited in Badger, I hope that they have just as many or many more, in cold storage in a, safety deposit box somewhere in their ledgers, not necessarily at risk. So it's, I think it's understanding the perspective that they're coming from, trying to teach them about the risks, give them the community to start learning more and, getting more involved and going deeper and kind of figuring out what else, they might find interesting, in the ecosystem.
And ultimately, the problem you're trying to solve with Citadel and Badger as a whole is just ultimately providing yield for people with Bitcoin. Is that sort of fundamentally the core of it?
Yeah, I think that's generally where it kind of shakes out. If you're saying bring Bitcoin to DeFi, like what, if you're going to bring it there, what else are you going to really do with it? I'm kind of one of the people in the opinion of, buying things with Bitcoin's generally not a great idea. Borrowing against your Bitcoin to buy things, sure, but actually spending it, I don't know why you necessarily want to do that. But, using it in DeFi generally means, okay, how can you earn yield on it? And I think what we're running into with, not running into, but, we knew we were kind of run into it with Citadel is we can go beyond just Badger vaults. Most of the Badger vaults are focused on the convex ecosystem now because it's where can you take Bitcoin with size and at least earn some yield. You can go to put it in a curve pool, and also key point is retaining pure Bitcoin exposure. So you can go to the REN BTC WBTC or the REN BTC WBTC SBTC curve pool, all which have have a long track record of high correlation and security, and you can deposit into that pool baseline. It doesn't really earn much. If there were to be, votes for it, it would earn a little more. But one thing that's been clear in all across DeFi is there's pretty big appetite for Bitcoin yield. So as soon as 5, 10, 15% yield pops up in Bitcoin, there'll be enough Bitcoin pop up near immediately to push that yield back down. So it's how can we be creative and find other ways to find upside. So like with Badger specifically, we're leveraging bribe harvesting with our convex and actually distributing that through the Badger app instead of voting for Bitcoin pools. Because there was too much of kind of a free rider problem. If we were to vote for the pools, people just deposit into it, but Badger doesn't get any of that back in fees. So it's better for all the users to actually just come to the Badger app, deposit in there, and then we use our convex to bribe harvest. Citadel kind of operating with Badger will allow us to kind of turbocharge that. And I think also with Badger, while like I mentioned, we're kind of moving towards more of a general purpose vaults framework. We have our LP paired with Bitcoin. We have a lot of we call it treasury controlled liquidity, but treasury owned liquidity pools on Uniswap v3, all paired with Bitcoin, and I think that helps drive Bitcoin correlation. And I think we're also kind of hopefully pushing towards Bitcoin, Badger being a more correlated Bitcoin asset. The more mature the asset, Badger the asset gets. So hopefully that'll allow us, because I think LP is always the best way to get exposure to Bitcoin. So we're also doing other analysis like, how correlated is a WBTC ETH pool. ETH and WBTC have a pretty long track record of being correlated. So, does the LP have a pretty good correlation profile to Bitcoin itself? I think there's a lot of other angles we can take. How can you hedge out exposure, using, leverage and other things. So, that's the biggest part about the various nights that we're, bringing in is, how can we leverage their protocols in the best way possible to find, different ways to earn yield. And, beyond just, hey, we're going to, put some Bitcoin in this pool, give us some tokens. It's, LP or other things. And we think with Citadel going in and saying, hey, we could bring, a fairly large amount of deposits to a strategy. Hopefully that'll inspire, different protocols to build out more utility for Bitcoin, because it's hard to know if you, open up a, to use tokenomics for an example, like, a WBTC reactor, how much capital will come in? Will the capital that deposits, will they be good participants with the protocol? Things like that. So I think Citadel can kind of offer that, and that's kind of the angle we want to take is, hey, how can we, talk to these protocols, say, hey, we're going to bring a bunch of Bitcoin. We're open to take some, price risk with it, pairing it with whatever, and then do things that are hopefully beneficial to your protocol as well. So take tokens, block them, stake them, vote, participate in governance, things like that. So, I think that's what we're, kind of hoping is we can kind of, do this, keep kind of grinding it, deploying these new strategies, and then improve Bitcoin's overall stance in DeFi and make it more, omnipresent. So it's not just, hey, all LPs are paired with, ETH and stables. Like, it's like, okay, Bitcoin's still here. We're still of the opinion it's not going anywhere. I still think it's probably one of the better things to use as a LP pair. And if you have more and more things paired with it, there's more demand, there's more volume, more fees, more baseline yield, et cetera, et cetera.
Like, it does definitely seem like that it in Ethereum and like on L2s and in all places it does seem like that there's not a lot, I guess, love for Bitcoin. A lot of people just kind of neglect it, and you guys are really the one of the only big proponents I really see on Ethereum. You kind of said something similar to what Sam said. Like, I don't know if it was on our interview or um, on a Twitter space maybe I watched, but I'm in the same opinion that I agree that it's better to collaborate and work together, like as multiple protocols, to try to go up as one than um, try to like feed off of someone else. So I definitely like the approach you guys are doing for your protocol, at least before launch, setting yourself like this is definitely giving people confidence, or like at least it makes you look a lot better, because a lot of people agree with the sentiment.
Yeah, and I think it would have been harder to do without the track record at Badger. For better or worse, one of the first things that we've done, and I actually haven't seen many other yield aggregators do it, was we, launched Partner Vault. And it was around when Convex launched, actually, where we said, hey, we're just going to not sell all of the rewards. Yearn and, Beefy or any of these other, yield aggregator protocols are great. They serve a purpose, but a lot of us that got involved with Badger and were on the team at that point also had a lot of experience in DeFi, and it's like, the optimal strategy isn't necessarily just like farm and dump. Maybe it is, maybe it's some people's optimal strategy, but it can be to, take the token that you're getting and LP it, and then stake that LP and you earn even more yield. And so we kind of took this approach of, hey, we'll sell a portion of the tokens that are being generated for the underlying, so for Bitcoin. And I guess we started with our sushi pools, I think, and then we started doing LP. And even Badger, the Badger LP out of the gate, we are selling the Badger being emitted and selling a portion of it for Bitcoin and then re-LPing that. So I think we've been fairly equitable towards ourselves and protocols that we integrated with, and like just not just dumping all the tokens. And I think that built the track record of saying, hey, now partner with us on this kind of new path forward. Help us, and even you mentioned Sam. I know Frax is kind of making a push to want more Bitcoin in their treasury, and just talking about with you guys right now, thinking about it, like I think it's more that ETH, there kind of had to be this friction while ETH kind of found its way, and that takes a while, right? I mean, ETH is what it launched in 2015, 16, so 6 years ish old. For something of the size, like it takes a while, but for it to have been successful, you need those people to dig in and be crazy and defend it against everything, even things it doesn't need defending against. And now it's kind of like, all right, like it's here. You can kind of put down your arms and maybe be a little more collaborative. Some people will, some people won't, and it's fine. I think we're just kind of coming out of that need to fight and be like, hey, let's all, we can all kind of work together on this, and what are the strengths of Bitcoin we can bring to DeFi, and what are the strengths in DeFi we can bring to Bitcoin. Hoping we can help bridge that. And I think the way that there's I don't know if we're on like the mainstream ETH radar as much, but we don't really get any shred of pushback. It's I think people are generally pretty happy with kind of the angle that we're taking, and if anyone does have any criticism or feedback, more than happy to hop in the Discord. We'll chat. We have a pretty good track record of people coming into the Discord and maybe being angry or have some issue with us, and then I don't know if people have hung out on our Discord enough, you see all the Badger punk heads that Vipes from the community makes, and you see people hop in and they're all pissed off about something or just trolling or whatever, and then 2 weeks later they got a Badger punk head and they're in the Discord every day helping people out. So we've got a good crew. I think we're you come in and generally it's pretty good vibes. So it's going to take more than a couple maxis to get in the way of what we're building, and I think by more and more way more support than friction.
So in the Medium paper you have about the launch here, I was reading initially you have the convex strategy, and then you're going to take it beyond that. So a couple paths, if you could chase for us, is so I see Badger is ranked third as far as DAOs holding the most CVX. Will Citadel hold some CVX as well, that DAO? And then as you grow beyond this first initial strategy, talk to us all about the other nights, the other strategies, the other protocols you're going to be working with. It's really exciting to see all you're pulling together.
Sure. Yeah, and the Badger ranking, while we're pretty proud of, we're proud of where we've gotten to that. It is actually user controlled. So the Badger ranking there is the BVECVX vault, which is a liquid locked convex vault. There's liquidity for it on Curve, but there's also withdrawal capacity. So you deposit to that vault. Anyone that deposits to that vault has, you can exit it through the pool, but also there's, anytime there is a deposit, in 16 weeks, that deposit becomes available for withdraw for 1 week. So it's not your specific deposit. There's just kind of like a rolling withdraw capacity. Less rolling since the great unlocking and relocking. So we'll have to kind of, we have Badger rewards. People that are deposited in the vaults, generates CVX, and we're continually depositing that into BV CVX. So anytime there's a harvest that goes into BV CVX to then be distributed, that means that amount of tokens will be available for withdrawal in 16 weeks. As more people deposit, those withdrawals come out. So as we kind of process through another relocking in June or so, and we get through more, it'll be more gradual, pretty consistent withdrawal capacity. But otherwise, you can be pretty confident and know that in June there's, you would be able to exit, and then there's also the liquidity pool. So it's a liquid token, but we don't have full control over using its vote weight. We being, the Badger DAO or Badger team. These are obviously people that are deciding to deposit into that pool are giving up their, going to Votium or whatever and harvesting bribes or voting for the pools that they want to vote to. I mean, they're obviously giving up their voting power, but obviously there's going to then be an expectation for the baseline yield that a convex holder or locker would enjoy to receive that. So we pass through, we're currently doing a bribe harvesting strategy, and just harvesting the largest bribes, passing through I forget the exact ratios, but it's I think like 60 or 70% of it in BVE CVX. So we buy CVX with I think it's 60 or 70% of it, and then redeposit into BVE CVX and then distribute that. And then where another portion is buying Badger and then distributing the Badger to the depositors. And then there's like 5 or 10-ish% fee that's coming out of that we're then kind of using for Badger Zone purposes, using that vote weight. So there's a fee, but we don't get, we get more, 10%-ish, I think, vote weight out of that. So we don't have, hey, this is just sitting in our treasury. We do have a chunk that's also of BVE CVX. It's in our treasury. I forget exactly how much, but that we have, free and clear use of. I think it's mostly voting for the Badger WBTC pool. The Citadel will definitely hold convex. So we actually just posted today. If people had been following, there was kind of an initial, the way that Badger, convex is launching is there'll be an initial sale at $21. It's going to be uncapped as far as the number of tokens. So however many tokens are sold, that'll be kind of the initial starting supply. They'll all be sold at $21 a piece, and we'll be accepting, Bitcoin, obviously, Red BTC, WBTC, IVBTC, stables, and then also convex and Badger. And then we'd initially thought of acquiring convex and Badger in a second, more open sale, because we, kind of have a target ratio of total assets in mind that we want to hold, what we're calling influence assets, so Badger and convex in, and it'll all be kind of driven by the strategy. So I think in the next, either this week or early next, it'll come out. We've shared kind of the initial couple strategies that you mentioned, and we've shared some posts on kind of general management of the treasury, but we're going to kind of also be putting out and when I say putting out our general processes, now that the forum's up, we'll post things in the forum. There'll be an RFF open channel in the request for feedback channel in the Discord for kind of feedback and discussion. And then we're kind of rolling that while we don't have governance in these instances. It's kind of like pre-medium, like medium's basically the final governance, right? So it's like getting feedback in the Discord and then publishing the post on Medium for general consumption. But we'll kind of have a target treasury composition that will be publishing. So what percentage we want to have in this kind of core Badger strat, which will be putting Bitcoin into the IVBTC LP vault, and then also holding WBTC Badger curve pool, and then that Badger that's in that pool counts towards boosts, so we earn more Badger and better yield on our BTC, and then we'll be holding convex and voting for the WBTC Badger LP, which we're planning on being a fairly large holder of. So since we have generally high pool capture on that pool, ideally it'll be a economical for us to use the convex to vote for that, and kind of have two ways that we're earning yield on that strategy. Then we also have, as part of the proposal that was put through and passed with Frax, where they will be, I think it's about a $11 million total package in Frax and FXS. They'll be participating in the Citadel round at $21, and we'll be pairing that Frax. I believe we're going to be putting it in the 4 pool, and then pairing the 4 pool with WBTC, launching that on Curve, putting in a proposal for a gauge on that, and then voting on that pool along with Frax. And then we're also looking to do the same thing with Terra. A proposal was just posted, I believe, today, actually, for a proposal for a similarly structured at Terra. I think that one might be a little larger, though, focused on at $21 million in UST tokens, and we'll be also putting that into 4 pool, pairing with WBTC, and then having the WBTC 4 pool ideally getting a gauge, getting a convex pool there, and then voting for that along with them. So yeah, it's a core kind of piece of what we're doing. Obviously, it's one of the most productive assets out there, whether it's your ability to vote for a pool or to just earn yield by harvesting bribes. We will be taking Convex as part of the contribution event, and then we will also be taking BVE CVX since there's a lot of Convex locked up out there. There might not be that much available, so we're allowing people to also that might be in BVE CVX to deposit there using that as well. And then we do have our eyes on June during the unlocking to see how we'll see how this kind of comes up. How this event goes, if we want to acquire more, kind of targeting that time frame since there'll be more unlocked. But short story is that there'll be a post coming up of kind of what we think might be a good idea for target treasury composition. So that could be the saying that, okay, we want to have 10 or 15% or whatever of the treasury, or at least of the treasury allocated to strategy X or Y in Convex. So yes, it'll be acquiring some, and Badger will be kind of continuing on its path. And I hadn't really mentioned before, but the other thing is we hope that Citadel is a good kind of showcase of Badger vaults, both the influence vaults like BVE CVX, which initially Badger will be holding BVE CVX, but we're working on, as I kind of alluded to before, kind of automating a lot of the back end infrastructure for like bribe harvesting and voting and things like that. And then eventually be moving to its own wrapper or fork of BVE CVX for Citadel. So it'll be its own kind of locker. And the idea is to kind of have these Badger vaults kind of become more automated tooling that DAOs, individuals and other folks can kind of configure and use to where, doing these, operations for managing assets can be a real pain in the ass for, multi-sig. So if you can have a vault that just kind of, if you know what you want to do with these assets and you can have the vault handle it, it's much better to just do it that way. So that's kind of where we're falling with all of that, and we'll kind of be building out this stack within Citadels, hopefully kind of showing folks how they could also use Badger to build out their own stack. And core component of that is not just the deposit, the LP vaults, but also these influence vaults, namely Convex for now. But as the VEification of everything happens, there'll be more and more.
I love how your fingers are on the pulse. You mentioned the unlocking coming up in June. You talked about Pool. It really feels like you all are involved and you're paying attention and timing things according to what's going on in real time with this. So exciting stuff. Alejandro, do you have a question?
Yeah, actually. Well, there's two questions that I have. But the first one I want to start up with is, I know for sure for the community, at least in the Convex community, Citadel DAO has actually been brought up a couple of times. And one thing I saw a couple of times that they're worried about is that, at least as you can see in your Medium article, you classify yourselves like a treasury DAO. And, but except you guys got like help and like framed it. You did the mechanics, I guess the proper word, the mechanics differently than before to leverage like the benefits, but that system has, but also like be able to give sustainable yield or like revenue back to the stakers. I would like for you to like talk about that further, like what makes like the mechanisms that you guys are going to use to continue growing your treasury. Why is it different? Why is it different? Your thoughts on it, and I guess ease minds of any potential people that are gonna go into the initial sale, because Treasury does, if at least a lot of investors have like are wary from Treasury DAOs from the past few months.
Yeah, and semantics, right? But I think you're alluding to Olympus and the like. That there is a number of forks, and just like anything in DeFi, right? Something new and interesting launches and can get a lot of hype, and it can do very well, and then how do people kind of find the cracks in it? Well, you fork it and you change a couple things, and then more people fork that, and people fork the forks, and then eventually people kind of figure out, kind of what's going on. And yeah, there was obviously, I think people that got in early at Olympus are probably doing just fine, even if they didn't get out. But a lot of people that got in near the top are probably not doing well at all. So, it was definitely an inspiration for Citadel, and that was kind of where we started. It was like, okay, that was interesting to see how you could kind of have just a lot of the different forks with a different focus, right? Like Squid DAO, I think was one that was kind of interesting. I didn't follow it closely, but I know that was the only one that was like not US dollar denominated. It was ETH denominated. There's some things with the NFTs and yada yada yada, but um, as we
I
started,
actually was involved with Squid DAO.
okay,
Yeah, it was a fun experience. I got in late when
yeah,
the token was below the ETH value, and I actually did okay compared to probably a lot of people. But yeah, love it.
yeah. Well, I think the question with some of those is okay, and we even started. The initial idea was like, okay, can we do that, but have it be like Bitcoin denominated, where the token itself would track Bitcoin, right? Um, and I think the more we dug into it, the less that really made sense. Because then we started thinking, okay, where can you really, bring value to the token holders? And you know, how can we kind of strip away a lot of the complexity and try to be very open, and then just use kind of what we know about how a lot of these treasury DAOs went, and just like DeFi in general, like the trends and how things go. How can we leverage that knowledge to build? I think the quote we're using is we want to be the largest community owned Bitcoin position in the world. That's the modest goal. And yeah, I think we're going to probably work on a site where you can kind of see our progress towards like unseating El Salvador and you know Tesla and MicroStrategy and all the various well-known large public Bitcoin holdings. How can we kind of go knock them off? But yeah, to get into the mechanics a little bit, you know, we have a few different things that we're hoping make it so we can have sustainable growth. And it's interesting because we're just talking about it today. Is we focus a lot on sustainable growth, but then how do we also can leverage times of fervor and extraordinary interest to grow as well. So I'll go, I guess, the two major, I think, components that um, matter. So one thing is we're calling elastic emissions. So the token supply is uncapped. It's going to launch, like I said before, we're going to do an uncapped sale. It'll launch, that'll trigger the initial token supply, but the token supply relative to that initial supply is known. So there's a public spreadsheet in one of the earlier um, earlier Medium posts out there where you can plug in that initial supply and you can know how many tokens there'll be, 5-10 years from now. And I think, what we wanted to have is continued growth so that, 5-6 years from now, assuming all still going well, like we still have dry powder. We're still going out there. We're growing the treasury. We're acquiring more Bitcoin. That's the whole goal. So it starts out pretty aggressive. I think in the first year, the token supply triples or quadruples, and then tails off during year 2. And then I think going into year 4 or 5, we're getting down to, probably low double digit, mid double digit inflation annually. So we have there's a formula out there you can go look at. But the way we kind of backed our way into the formula, it was purely not academic. It was kind of having a curve in our mind and then fitting the equation to the curve. So we wanted to be fairly aggressive up front, have a fairly steep-ish drop off after a year or so, and then have it kind of ease its way into a level of sustainability of emissions. So having some yield, and all of this is governance controlled, so things can change and down the line. But we wanted to have something that we know, hey, that we can say we know the emissions for 10 years. So I think the initial starting APR, if all the tokens were being emitted to token holders, would be about 300%. So that'll obviously be a higher APY, and then it's just going to stakers and lockers. So that won't be 100% of tokens. So that'll be a little lower. So that's one component. And the other component that we have is the emissions are going to be split between people that are staking, which is you can stake your X Citadel and you just earn more. Sorry, you can stake your Citadel, you get X Citadel, and then that increases in value relative to Citadel. So it's just more Citadel gets pumped into it. And there's a 1 week, if you want to withdraw, you basically have to trigger the withdrawal, and then there's a 1 week vest of those tokens released to you. And then you can lock your X Citadel, and then that's locked for 21 weeks, so it's approximately 6 months. And then when you're locked, you receive, obviously the X Citadel is still going to the underlying X Citadel, and then you're receiving extraordinary X Citadel emissions on top of that. Then you'll also be receiving a portion of revenue from the treasury and a portion of the assets that are going to funding. The portion of the Bitcoin that's acquired from funding is distributed to lockers as well. That's kind of the environment. And then the way that we handle, so that's one component of where Citadel can go. The other direction Citadel can go is towards funding, or the term we're using is funding. So that's the equivalent roughly of bonding in how Ohm would use it. So that's where we're actually selling Citadel to acquire targeted assets. The way that it's determined if the Citadel is going to funding or to staking and locking is determined with what we're calling the MT ratio. So it's the market cap to treasury ratio. So very kind of first principles, where as the market cap is approaching the treasury value, that's a point where obviously things aren't super healthy. People aren't excited about the project as much. So at that point is when the tokens will start emitting mostly to stakers and lockers. So Citadel native APY will increase. And then also, less is going to funding. There's less selling pressure. So APRs on the app increase, and then less sell pressure. And then as market cap increases relative to treasury value, then more assets are sent to funding. We're acquiring more assets for the treasury, and less are going to stakers and lockers. So we're hoping this is a nice balance where it's, if the market turns, or if there's less excitement about the project and the token price goes down, the emissions, people that have been locked are actually going to be concentrating their position. They're actually going to be gaining share of market cap at that time, because it'll go all the way down to 100% of the Citadel emissions going to stakers and lockers, and these are governance controlled variables. It's basically just like a linear function from some kind of target equilibrium for market cap to treasury value. And then I think it's once it gets down to like 80 or 90%, that's when it's 100% of all tokens are just going to stakers and lockers. So it should be concentrating people's positions. And then, there's no built-in redemption, but, it's governance driven. So if, it goes down and people are unhappy with it, they can always vote to try to just don't dissolve the whole thing, add treasury value and move on. So we're hoping that, can stand in for redemption capabilities, because providing redemption is a nightmare. Maybe it's something that could be worked out down the line, but if you're trying to put assets to work, we can have things in 8 or 10 different protocols on different chains and layers. So providing a way for people to like redeem tokens for the underlying value is just not something that can be solved for at the moment. And then hopefully, if people are excited about the project and it's doing well and the market cap tracks high, then we're buying assets with Citadel that's above treasury value, and that's good for everyone who's in the token. So we're getting growing the treasury at a rate likely higher than where they got in. So those are kind of the main key mechanics we're hoping to differentiate it from some of the other treasury projects that are out there, and it's trying to be something different. I think Ohm had this reserve currency narrative, and I haven't been following as closely. And some of the other forks had the similar narrative or something completely different. But yeah, this is truly a more of a treasury focused DAO. I think we the taglines we use is also kind of like a Bitcoin denominated tetranode DAO. So we definitely want to work with protocols. We want to bring deposits into protocols. We want to help other protocols be successful. I think that's the best way we can hopefully grow value and get exposure to new things and make new protocols want to work with Citadel, and give Citadel holders that that exposure as well. So happy to clarify any of those mechanics if you guys want to dive into anything.
Actually, I think the picture you have of the MT ratio and the graph there makes a lot of sense. The flat line you have looks like sort of the optimal range you're hoping for between 1.1 and 1.5. I think makes a lot of sense. Where do you see it being? Like look into your crystal ball. Where do you think the MT ratio will pretty much live?
Good questions. That's we kind of put the flat line there where we think the equilibrium is going to be. I think it's going to be about 1.6 at launch, because people are going to be contributing, and then there'll be another set of tokens that'll be minted and distributed to Badger and to early contributors and to the Knights, all the various partner protocols. So that it won't be kind of one-to-one right out of the gate. But like I said, if people hate the project and the token tanks, then those the emissions, the total supply is increasing pretty quickly over a period of time. So that'll kind of consolidate to lockers and stakers. So we're hoping it does well. I think the idea is to maybe, depending on how the sale goes and things like that, launch liquidity at like a 2x ratio, perhaps. So we'll see. It's kind of it'll be interesting to see how many people lock right out of the gate. People that contribute in the sale will be receiving X Citadel, so they'll have to go through that initial vesting unlock period if they want to get access to the Citadel to then sell it. Otherwise, people have the ability to lock it day one, and I think how many people lock is going to drive a lot of the action. So no idea. Big questions are going to be how much do we sell, and I think it's one of the how much do we raise in that initial sale for the DAO, and I think that's been part of the struggle with initially coming up with the initial strategies, because what you do with $20 million in Bitcoin is a lot different than what you do with $200 million in Bitcoin, right? There's just different strategies available to you, different needs. So we don't know exactly how it's going to play out. So yeah, we'll see. And that the graph that you're referencing, that can be changed by governance as well. If we launch and kind of get a couple epochs under our belt, and then say, hey, we think this should be something else. Like, we can give it a tweak.
So have you got in touch with Grayscale so they can do something with all that Bitcoin they have just rotting away?
Well, I mean, if the U.S. government is going to approve an ETF, they might as well just put it in Citadel, right? Or at least a physically backed ETF.
There you go. There you go.
Yeah.
Yeah, I could agree. It's a lot better than just having it rotting
Yeah.
there.
And speaking of TradFi, if you're trying to use like Citadel DAO wherever we can, at least until we're ready to accept any you know, any attacks from the original Citadel.
You are the original Citadel.
Yeah.
That's my take.
At least in our
Yeah.
hearts.
Yeah, I hope so. Appreciate that, guys.
But I definitely appreciate you going so much into detail about the Treasury DAO part. And like what makes you different, the mechanics they have in place. Because I'm sure a lot of people are gonna appreciate it because like yeah, there's some people that was a part of the different like Treasury DAO communities back in the day, but as as a lot of there also been a lot of people that just spectated from the background, and saw like what happened, and that caused like a bit of a worry. So I'm glad you explained a little bit of how you guys are gonna like. There's no 100% guarantee, but hopefully you fix the problems that the previous ones had, and you can continue this long term successfully. I personally have nothing against treasury DAOs. I actually it's amazing how efficient they are in acquiring capital for their treasury. It's even the most ridiculous ones back in the day got like a ridiculous treasury, even with no product. Um, so like if having an actual product and an actual really good no goal in mind and coordinating with a bunch of different protocols, um, at least in my personal opinion, I think you guys have a really good chance, like long term.
Thanks. Yeah, and, the coordination game is, I think, is the key because we don't necessarily have we have Badger as the product, right, that we're using, and we'll likely be leveraging Badger to build a lot of the vaults, convex or otherwise, that we'll be deploying assets into. Um, but Citadel itself, we're kind of working towards trying to structure all the strategies into kind of more composable things. Uh, and we've got some risk frameworks that we're working on, and there'll be dashboards and all that good stuff. And if anyone listening wants to dig into that, hop into the Discord. We have a bunch of people working on it. It's going to take a while to figure out. And it's funny because it's my pre-crypto career for the most part. Like I said, I was working with hedge funds. Um, on order management systems that covered, compliance and P&L tracking and trading logic and things like that. And somehow, in some ways, it feels like my experience kind of coming back around is okay. How can we take these strategies, put them in a way where we can start tracking the relative allocations of each, the risk exposures of each, so we can see, granular within strategy, but also at the overall treasury level, like what the risk exposure is. And we want to make Citadel a productive asset beyond just, hold it and get some exposure to the treasury, and hopefully it grows. But if we can get these, process in place, if we can get a way to uh, structure these strategies. Okay, here's strategy A. Um, how we deploy assets between strategies, is a governance decision. And what that can mean is that okay, holders of Locked Citadel can now vote to deploy assets in one way or another to a strategy through the funding mechanism. So protocols could vote for Citadel to deploy uh, its own assets, deploy its, funding assets to a strategy. Now we want to make sure that these are all, meet the goals and of what Citadel is trying to do. So there'll be some hurdles in place. I think that initially we're just starting with like a risk committee to kind of review proposed strategies and say, hey, does this like, fit the goals of what Citadel is trying to do? But once it's in there, it's, people can vote for it, and that can involve, acquiring some governance token or some other asset to kind of buoy that the yield in that strategy. So that's something we're definitely interested in building out, it won't be there day one. But how can we make it that it's a governance controlled treasury, and make that not only appealing to there'll be some people that are around and wanting to contribute to how risk is being managed and how the assets are being deployed. And a lot of the people on the team will do that, and there'll probably be a fair number of people in the community that'll be around and um, participating, but having it so that there's what we kind of refer to as these like meta games on top, where there can be protocols acquiring assets to deploy into strategies on themselves, or people bribing for getting Citadel to deploy more funding budget towards a strategy that acquires a certain asset. Things like that, I think within the bounds and the goals of the protocol, I think are pretty exciting, because we can start putting in these kind of more DeFi native frameworks, like the stuff that I think is like really proven to what differentiates DeFi. How we can build that into like this this more traditional structure of a thing that, hey, it's going to acquire assets, going to deploy them in a way for a number of depositors. So yeah, very very excited how we can um, find how that plays out.
So, final question for you. And we like to ask everybody this. It's 2025. Everything has gone exactly as planned. What does perfection look like for Citadel DAO?
Whew. So I'd start from the side of decentralization. So meaning that it's largely not controlled. Like, people are touching as little as possible with it. And I think we're working our way there with Badger as well. And I think there'll be components of, we're initially acquiring Badger for Boost. But I think as we figure out the exact mechanics for Badger long term and move to this more general purpose vaults protocol, holding Badger may be something you need to do to get get Badger to deploy a vault that you want. You can need to hold it to enable your vaults for emissions, for Badger emissions, to give a multiplier on them, things like that. So that's just kind of an example, but we can have these strategies where Citadel's holding the assets. Strategy is proposed. We're working on like a delegation system for having a hurdle. They've actually just posted today in the forum for proposing adding things to the snapshot. So anyone can kind of come, put forth a proposal. Proposal gets kind of reviewed by the community, approved. Strategy gets built out by a secondary proposal, then gets put forth to Badger. Badger builds a strategy. That strategy is deployed. Then there's a secondary kind of game on top where voters are allocating the resources. So if 2025, 3 years ish from now, we'd be still be having pretty reasonable Citadel emissions that are going out and being deployed for acquiring new assets. Hopefully it's fairly sizable protocol at that point. So, even if we're looking at 10, 20% a year at that point, it's still a fair amount of capital to be deployed, especially for like newer protocols. And then there's, snapshot voting or whatever voting protocol is being used at that point, but on-chain voting to drive how those assets are being deployed. And all of it's tracked on a live dashboard, all on chain. All emissions are being kind of harvested and redeployed as designed. And we're all just kind of stewards of the protocol. I'm sure there'll be stuff on the fringes and things like that, but getting things as much as possible, like out of the hands of all the various multi-sigs and things like that, would be ideal. So, I think that's where we want to get, and, how big it gets, God only knows how how big everything's going to be at that point.
Right.
But yeah, I'd say that's the main focus, is like, how can we have this thing be as, decentralized as possible, as well integrated as possible. And I would love, for whatever DeFi looks like at that point, to have, Bitcoin be a core piece of it, whether it's a lot of Bitcoin pairs, or however else it manifests. And we'll just hopefully still be cranking along, still working with new protocols and finding new ways to deploy capital, and yeah, and have grown to a sizable extent. Let's see, who should we eclipse by that point? Maybe that's the better goal.
Sailor,
Yeah,
Eclipse Sailor.
Yeah, we'll have more Bitcoin than Sailor. How's that?
I would definitely love to see that.
And Alejandro, won't it be exciting when his treasury is trying to acquire KingMaker Podcast coin?
Oh, I would definitely appreciate if they did that. One thing I wanted to make sure was that, obviously we're reaching to the end of the podcast, and I'm sure there's a lot of things that we didn't disclose or discuss. And so, where would you recommend people to learn more? And if people want to participate and start contributing to Citadel DAO, where would you recommend them to go? Just say that before we go.
Yeah, definitely. The Discord is the best place to go for everything. If obviously you can't just like talk about Discord links, so I'm just pulling up what our actual Twitter is here. But check out at the Citadel _DAO on Twitter. In the profile or on any of our tweets, you'll see the link to the Discord. Hop in the Discord. Very friendly community. Ask any questions you want. If you want to contribute, hop down to I think it's literally called like looking to contribute channel. So we've got a whole kind of inbound. Yeah, so there's a category in the Discord called looking to contribute. There's a channel called roles. Click on that. Click an emoji. You'll get however you want to contribute. It's basically like marketing, policy, and engineering. Hop in any of those channels. I think we're holding weekly or bi-weekly community calls. I'm not on all of them, with folks from the community in each one of those kind of categories. And yeah, it's very open. So if you want to contribute, just start contributing if you have an idea. On the policy side, we're looking for any strategies to deploy capital in size that earns decent yield and has a reasonable correlation to Bitcoin. There's a channel called Treasury Strategies. You can share any ideas in there. Just a whipped up Google Doc is fine. We'll light up a thread. We've got ones going for Butterfly, Tokenomics. I think the convex ones are largely baked. There's not a lot to necessarily sort out there, so we don't really have an active channel on that right now. But if you have other convex strategies, share them. Marketing and design, we've got, I think there's going to be a meme contest coming up, but a lot of great people from the community putting together, videos and other cool stuff. Check out the verification site. You'll find it posted a number of places. I don't have the link right now, but if you have taken any actions at any of the partner DAOs, Convex, Alchemix, Redacted, it's got Bren, Terra's the new one, Frax. I feel like I'm totally gonna forget one. I'm gonna pull up the list. I think he stared at it for so long. Faye, Rari, Tokamak. I think that's everybody. Jones. Yeah, Jones DAO. They all provided whitelists. Go see if any of your addresses are verified. If you are, then you'll be able to participate in the contribution round. I think it's like 10 or 15,000 addresses, maybe more. So it's fairly broad. And we didn't talk about it much, but I guess you hinted at it a lot. But it's almost like also like kind of a non-Sybil mechanism. So it's, we're doing this uncapped sale, a fixed price, but, it should be kind of real people participating in it. So the way that we structure that hopefully pays off well. And yeah, we're still, early contributor program is still active. So hop in, contribute, and, we're kind of keeping track, and who knows, you might get some tokens or whatever. So we're kind of, everything's just based on, free, open participation. So whoever kind of pops in, steps up, and provides value, like, that's literally how I started working full time at Badger. I was working at a different kind of DeFi project before, but it never launched. We just kind of kept pivoting into the ground, and it was kind of, after a while, I was getting a little disillusioned with it, but whatever, just started contributing at Badger, and then fast forward a year and a half later, and been there for a while, and it's been a great run, and looking forward to continuing to work on it, and also get Citadel out to the masses. So you never know, just hop in and have some fun.
Awesome. Well, Jonto, thank you for your time. Great conversation. Can't wait to get this podcast out to everybody.
Yeah, thanks for having me on. Appreciate you guys.
KingMaker Podcast.